Welcome back to the Digital Asset Report. Crypto markets jumped Thursday after President Trump signed an executive order allowing Americans to hold crypto in their 401k plans. Bitcoin surged to over 117,000 with the broad market following. The order directs the SEC to make room for alternative assets like crypto and private equity in retirement accounts. It's a major shift for long-term investing, and firms like BlackRock and KKR have already backed the move. Over the weekend, the rally picked up steam with Bitcoin retaking 120,000, putting it just a few percent off its all-time high. Ethereum broke through the $4,000 mark and closed at its highest daily level since 2021. Investors poured more money into Ether ETFs than Bitcoin ETFs last week, with flows of over 320 million. Trading volumes spiked across both spot and derivative markets as crypto continued to trade like a macro asset in a world of rising debt and inflation. That momentum also gave Ethereum-linked ETFs a major boost. July alone saw over $6 billion in inflows to Bitcoin and Ether ETFs. That's helping push digital assets into long-term portfolios. Advisors like Rick Edelman now say investors should hold as much as 40% of their money in crypto. That's a big change from just a few years ago when he suggested only 1%. In just a few months, you'll be able to hold crypto such as Bitcoin, Ethereum, Solana, and even Dogecoin in your 401ks right alongside your traditional stocks, bonds, and other assets. Ethereum in particular is having a moment. It's become the go-to platform for tokenized finance. BlackRock, JP Morgan, and Robinhood are all building on Ethereum. And now it's getting its own institutional treasury playbook, just like Bitcoin did. Fundstrat's Tom Lee explained what's happening and why he thinks Ethereum could be on its way higher.
In 2025, a couple things are happening around Ethereum. The first is the Genius Act is now making stable coins kind of green lighted, which is the ChatGPT moment for crypto, but it needs a smart contract, so it doesn't work on Bitcoin. The second is the SEC is pushing forward with Project Crypto, which is actually asking Wall Street to move the entire financial system onto the blockchain. Ethereum is the preferred choice for Wall Street because it's had zero downtime since inception, matching what the banks want, 100% uptime.
The Winklevoss twins and Gemini co-founders who are preparing for a public listing just invested Bitcoin into American Bitcoin Corp, a mining firm backed by Donald Trump Jr. and Eric Trump. That company is set to go public in September through a merger with Griffin Digital Mining. Gemini's IPO, combined with its political donations, shows just how deep the industry's ties to Washington are growing. In fact, the Trump family's direct involvement in the crypto sector keeps expanding. World Liberty Financial, a company co-founded by Trump's sons and backed by the president himself, has created a $1.5 billion crypto treasury. The firm is using shares of a publicly traded company, Alt5 Sigma, to buy its own WLFI tokens. In central banking news, Trump is shaking up the Federal Reserve. He announced plans to nominate Stephen Moran to replace Governor Adriana Kugler, who resigned last week. Moran is currently Trump's top economic advisor. He's been critical of past Fed policy and supports reciprocal tariffs. He also happens to be a longtime Bitcoin supporter if his past tweets are any indication. Overseas, China is shifting gears. After years of pushing a digital yen, Beijing is now looking at stablecoins backed by it instead. A scandal stalled their central bank digital currency, and adoption has been slow. In contrast, dollar-backed stablecoins like USDT and USDC are being used more and more in cross-border trade. Now firms like JD.com and Ant Group are launching offshore yen stablecoins in Hong Kong and Singapore. The goal is clear: challenge the dollar's dominance without losing control of the system. Back in Washington, there's been a major shakeup at the White House Crypto Council. Bo Hines, the executive director and one of the top crypto voices in Trump's administration, has stepped down. Hines says he's returning to the private sector but will continue to support the industry. During his time in office, Hines worked closely with David Sachs to craft the administration's crypto agenda and champion the creation of the Strategic Bitcoin Reserve. Critics say the council under-delivered on the reserve's growth strategy, but Hines' leadership helped push the U.S. to the front of global crypto policy. Patrick Witt, the deputy director of the council, is expected to take over. All of these stories today point to one thing: this industry isn't slowing down. Digital assets are picking up speed. If you enjoyed this video, be sure to give us a like and a follow, and head over to bitgo.com to learn even more.